Adam, very much welcome here at the Business Growth Support Business podcast. Tell more about yourself. I'm curious who we have here in the studio.
Sure. Well, thanks for having me. It's fun to talk about business. I'm CFO of Vero Capital, which is a New York-based private equity company, and the company has a few different business lines. One is a traditional real estate private equity, where we underwrite and acquire commercial real estate and multifamily and asset manage them. There's a more actively managed social club within an apartment complex business, a fund of funds business, which is something we're spending a lot of time on, and a new social racket sports club business, which just opened our first location 2 months ago. And that's actually a more of an actively managed business that was a joint venture between Vero and Good City Studio. So yeah, there's a lot going on at the company. It's a pretty entrepreneurial owner.
I can hear. And I really like the racket sport adventure you are having. That's different, I hear, than a regular private equity. Tell me more.
Yeah, we like playing, a lot of us like playing tennis. Unfortunately, the first club couldn't fit a tennis court. It's in a really cool historic building in Philadelphia that was an old energy plant. And there's apartments in it and a hotel in it. And in this huge atrium with like 40 or 45 foot ceilings, we had this like two-tiered space to put in some padel courts and pickleball courts, and some golf simulators and a bar. So it's really, in some ways, it's an urban country club, but it's not just members only. It's open to the public, and we think there's a lot of demand, one in that area, which is specific to Philadelphia, but two, for like multi-sport facilities that are very high end and can offer like amenities and quality of service like a private club, but is open to the public and accessible and fun.
So Vero Capital invested in it, but is also running the business basically, as I understand.
Part of the management team and part of the capital raising efforts. Yeah.
Okay. And how are you now trying to grow it as fast as possible? What are you doing in the always curious?
For fitness clubs, there's no secret. It's sales and marketing and having events and making sure people know. And then when people come in the door, that everyone, understands the value proposition of the product and gives good tours. Yeah, there's no secret sauce, but we do think, well, I guess that's not true. So on the Vero side, and then I mentioned the co-founders, a Good City Studio. So a couple of people, Amanda Potter and Dave Goodset, they bring, I think, what is a secret sauce, which is a really good eye for style and programming. And so like most gyms or fitness clubs, you've optimized the space, you have like a big square or rectangle, and the things are more or less nice. You have gym equipments, and some have various amounts of luxuries in the locker room or not. But if you've been in, outside of a couple of, ultra high-end clubs, there's many similarities, and the differences are in how big it is and how many pieces of equipment, what types of classes you can do. So what is unique here is definitely the feel and the look and the vibe. And that's something where on the operating partner side, like coming more from hospitality rather than fitness, gives a unique perspective into what can create a really great atmosphere that's as much social and fun to be in as it is to get a good workout and have cool fitness programming.
So they try really to create an experience for the person who goes to the gym, and that makes it unique, the secret sauce.
Yeah. So some of that is like entertainment. So there's things like spin, where you can have drinks and eat decent food and play ping pong, and bowling alleys and things like that. So that's like understanding, people want to have a good time, not just work out, but marrying that with really like high quality sports space, lessons and programming and food.
Really interesting concept you have there. And I really like
Yeah.
that your company is actively involving in the company after investing.
Yeah.
And that is
Yeah, for
different
sure.
than the industry. Is that a trend you see maybe in the industry, or is that?
Well, I think, I mean, private equity's been involved in the fitness industry for a while, so they're sponsoring the growth of some of the largest franchises in the country. So Anytime Fitness, or a newly a decently large size brand called Workout Anytime that I would expect to grow a lot. So it's not new to the industry. I do think the team that's working on it has a
Mhm.
lot of good operating experience to bring, and so that's unique. But I mean, private equities, looking for growth markets all the time and is willing to deploy capital. So that part's not new, but I think the operating expertise of on the Vero side and on the Good City side is unique. And I think that's always the challenge in private equity. How do you add value if you're an asset manager? One way is being really strict with underwriting and not getting caught up in day-to-day fluctuations or reacting to things. Another is understanding the business because you've operated in it in various capacities. In this case, whether you've opened a gym, you've been part of the sales organization, so on and so forth. And so then you can have more in-depth questions with the other team members who are part of the daily operations and ask better questions, and then I think provide better guidance or take different steps that will result in a better
Totally
operating
agree.
facility.
I totally agree. I think you really, if you have knowledge of the business, then you can manage it better, but even more as a private equity company. So I
Yep.
think that's really wise what you're saying. But Vero Capital, are they only focusing in the
Real estate and office and hotels, or sorry, apartment buildings around the country, and a typical PE real estate fund. So raise some capital, identify deals, try to be as disciplined as possible in the underwriting, and then you put in place your property management team to execute the business plan. That's been a big part of the 15 plus years of the company. A new growth part is a fund of funds. So through the general partners, experience outside of Vero Capital, in other private equity, having access to other strategies, fund managers, and so on. That's been a growth path for us, and doing our own due diligence, but understanding who really strong other fund operators are. It's a pretty interesting niche, and it is not related to real estate. So the business has evolved over the last few years to have different strategies, and I think the CEO Dan has done. He's an entrepreneurial person, not just basically an asset manager. So he understands where you need to step in and either be a more active operator on the real estate side, or understand where through that business you've developed other areas of expertise or in relationships, and you can grow your business that way. So I think that's been the main driver, is seeing where other strengths and relationships have built up over time that you can use to build new businesses.
So that's working well for the company,
Yep.
being a more active operator. But are there also things which are a little bit more frustrating? So we're understanding as audience what is difficult by being an active private equity company in the operation. Is there any difficulties?
Yeah. I think, I mean, when you're in asset management, you have quarterly check-ins, and you are doing site visits and board meetings. But the cadence is slower, and
Mhm.
the day-to-day challenges, emergencies, successes, you don't hear about a lot of them because you're not on site.
Uh,
And so the weakness of that is you are analyzing more general data or summarized data, and it's usually financial. And in the operations, right before this call, I was in a meeting about how to a staffing meeting because we're trying to optimize the food and beverage operation while it's still ramping up. So you're balancing providing the service and the offering in this level of amenities we need to have available with the reality that the business is brand new and it isn't 100% occupied all the time. And so, okay, that's a challenge we need to address now. There's a membership component, and so you're trying to figure out how to get as many members so they use the courts and they use the restaurant. And so there's all that day-to-day things. And you actually don't see the fruits of that right away either, but the excitement is there. You need to make a decision. So it feels like make a decision, make a decision, make a decision. It's the beginning of the day. I expect to see something at the end of the day because we all were really excited, and that was the thing we're debating about.
So you're basically,
and actually the results take longer to bear fruit. So like the asset manager mindset helps, where you need to like let the strategy play out. Some of the things that crop up day to day, you just acknowledge and move on. Yeah. So you have being able to take a longer term view, even though the whole longer term might just be a week in the operating business and not a quarter. So yeah.
So what is a little bit frustrating when you're also running the business as a private equity is that you're missing out the daily wins because you're not actually in the operation. You're like helicopter view.
Yes. It is exciting. You see like the digital gong when the sales team, has their successes and they're very excited, and you can see how the funnel from marketing and to sales to see the members comes in. Like that's like, it's exciting to see the people enjoying the thing you made and have spent a lot of time on. And yeah, you certainly don't see that very much as in asset management. Yeah.
And
like oftentimes I'll underwrite a building. And so at the beginning, you will go interview tenants, and that's really their opportunity to mostly complain to you about the things the prior owner didn't do. And they're concerned you're going to be even worse than that person. And so how are you going to assuage their annoyances and concerns? And you're going to be, this time is going to be different. And then you check in, and some of them, yeah, exactly. And some of them are fine and they don't talk to you anyway. And you end up talking to the ones who have the complaints. So that's a lot of my, it's a lot of your customer interactions.
That's your day-to-day. What?
Or dealing with lender compliance and everything, because it's
and if we look at the metric, where are you most focused on improving?
Well, on the racket sports business, it's new, so everything. We're figuring out where the strengths of the business are. We have our initial thesis, and now it's time to find out, over the next 2 months where there's changes to be.
But if we look at a different business, which you also have in portfolio.
Yeah, the capital markets are tough. There's like the changes in interest rates have been slow, and so the real estate's a very debt reliant business. So it's so in addition to like the loan to value, the interest rate, and so the debt service coverage is the driving factor in it. Unfortunately, from a borrower perspective, rates haven't gone down as much as we've hoped. And so when you're refinancing properties, it makes it more challenging. And so, currently doing deals is more expensive still, both in like deal costs and time to underwrite. I would say the market is, at least in our experience, has been thinner. And so it's been a challenge. And so hopefully either a combination of, future interest rates declining will bring more lenders into the market, or just lower the overall cost of capital to do deals, and that'll help make transactions easier.
Yes, but if we look at metrics, besides the interest, we look at the asset you have under management, which metrics do you look at to improve the asset? Because we're all about growing, and we want to know how you grow the asset, and on what metrics are you looking at?
Yeah, well, for most of them, it's occupancy and rate. So in your office building, it's monthly rent. In the apartments, it's the average daily rate, and so it's I think those are the big ones. And in the apartments, the margins are very thin. So then what's the downtime? If there's a vacancy and someone doesn't renew, that's critical. And then what can we monetize the amenities? And so in a particular portfolio of ours, we separately run like a social and fitness social club. And we provide a lot of programming. So it's not just that there's a nice gym, there's community events, and they're inside, they're outside. There's different fitness coaches that come in and lead classes. There's DJs that come in. There's pickleball events that are hosted. And so we built courts. And so that's an actively managed
Lots of
part.
metrics.
Well, I mean, the metrics is the revenue from if the revenue is better than just not doing it, basically. So if your net margin on the social club is better than your net margin on the rest of the apartment, then it's a success. Or you're also hoping that your members or users of the social club draw from the greater community. So is there a percent of that hopefully is significant that aren't tenants in the building? We're also hoping that over a 12-month period, renewal rates go up. So those are, those are things those are the big things.
So that's the goal for 12 months for the Racket company. But what is the goal for Vero Capital to accomplish in 6 months? You have like targets or growth in mind?
Yeah, well, in the fund of funds, we're hoping to have some successive closes of the new fund and have raised over $100 million for that. So I'd say that's a short-term target. And then identifying the funds and managers to deploy that capital to. In the racket sports is to successfully get through the busy sign-up season. So to have over half of the memberships sold, and then in the real estate portfolio, continuing to maintain occupancy and have success in renewals and pushing rents. So.
Okay, sounds like achievable goals for the coming months.
Hopefully, we think so.
If you could solve one major challenge today, what would it be?
That we could accelerate the stabilization of the apartment portfolio. I think that's where we spend a lot of time. Those were a combination of new construction and value add. So we're in the stabilization. It's just challenging. It's in Texas. So I think if we could solve one problem, it would be to have successfully gotten through the stabilization of that portfolio. It's been challenging with getting the right mix in the business model, and we're very, very close and have had a lot of successes. And so hopefully the next few months, 6 months, sees that through. And I think we'll be, I know like Dan has certainly gotten a little more gray than he anticipated as a result, and he'll maybe get some of that hair back when the thing is, when we get to the other side of that.
Is this challenge you're talking about unique to your business, or you think this is industry-wide issue?
Some of it is the timing of the initial debt. And so we didn't have the lowest interest rates, and currently you're refinancing out of a renovation and interest rates haven't come down a lot. So that's been one of the challenges. And so while you're stabilizing the asset, we're hoping to get credit on a pro forma basis. And obviously, a more conservative approach is to look at trailing 12. And while you're still stabilizing the asset, your trailing 12 isn't as high as you'd want. So I think that's not unique to us. That's like a cohort of investors who've deployed capital sort of right at the end of the low interest rate environment or at the beginning of interest rate increases, and that's been challenging. There's not a lot of forecasting to do where you could have avoided it. We're in the business of buying real estate and adding value, and so there's not a lot of flexibility to just like do nothing for 5 years. So part of it is having the experience to know how to work through it, even though in the short term feels a little worse than it may be.
Yeah, I totally understand. So doing nothing is always the worst plan. So you have to take
Well, I
action.
think, yeah, I mean, if you can take like 6 months or even 12 months, there's some leeway to do that. But just to say we could have sat out 2023 to 2026 or seven is, we wouldn't have a business. So you just have to, you're just managing through, you can't cherry pick your economic environment.
Yeah, no, that's totally true. It is what it is, and we have to do it in
Yeah.
this situation and make the best growth of it. That is for every company.
Yes.
It was great to have you here and
Yeah.
for
Thanks for having me.
and sharing your insights about your business and really about the Racket company. I think that's a really interesting business you have.
Yeah, I could talk about it all day. I love the fitness, health and fitness industry. So it is a big plus to be a part of that business.
And I think the audience will also like this very much, Adam. It's just we chatted really relaxed, not in a difficult way, and the audience will really like that.
Yeah,
But
and the audience is welcome to come to Philadelphia and come to Ballers and play some padel, pickleball, and have a drink. So extended the invitation.
I will put that in the invitation. And
Great.
what I found interesting in our call or in our podcast is that you mentioned it's really a startup.
Yes.
You have a lot of startup problems, probably, I can imagine. I didn't want to say that on our recording.
Oh, no, that's fine. I mean, yeah, you are trying to find product market fit. You're burning cash and you hope to figure it out before you run out of cash. So that is totally normal things to
What's the
be
biggest
nervous
pain
about.
point there? I mean, what is the biggest challenge there?
Well, we don't know. We're still learning what the right mix of our customer is. We built so we have golf, pickleball, padel, squash, like a turf field for soccer or group classes, a gym, and then a restaurant. And there's a smaller restaurant on the second floor where the courts are. So 2 years ago, there was an initial thesis on we'll have a lot of people playing pickleball and then padel and then squash. And the turf field is, a significant amount of square feet. So between having events on it and other sports activities on it, that'll be a big driver. And so as we've opened, the way the sales and revenue is shaken out in those different spaces has been different. Now it's only been 2 months, so it's hard to know if that's going to be the pattern going forward. But in 2 months from now, we'll need to see where we're at and if that was the right mix, if we need to just give it another 6 months, or if we need to say, okay, we need an extra golf simulator, or we need a fewer golf simulator, or squash was more popular. How do we accommodate demand
So
for that?
you're now
So
you figure out the product and you're figuring out the
yeah,
audience, the target
yeah,
group. And while you're doing that, you try to generate revenue. And are you
yeah.
doing also already marketing?
Yep. Yeah, we've been marketing since before the place opened. And that's part of what the Good City co-founding team, David and Amanda, they can really have done a great job of getting the brand and showing how it's a differentiated product before the place opened. And then when you come in, I think people are even more impressed because the space looks so cool for any type of facility, but certainly for a sports facility. And I think that's helped. And people come in and they want to stay and they want to hang out there.
I think that's a really good USP that it looks so different than other gyms, the experience.
Yep.
But what I find really interesting is that you as private equity asset company are actively engaging in companies in the management. And I think that brings a lot of challenges as well in the whole operation, in optimization, in the way you set up the team, because you really actively have to run the company.
Yeah, I would say I wouldn't want to overstate what I'm doing. I mean, there's 50 people who work there, maybe or more. So on like the execution of the business plan, there's a lot of people doing it. And as a manager of the company, that there's strategic things that I understand and can talk about, and there's from experience some benchmarks and metrics that I know we need to be aware of. And so when you're building up the property operations, it has to reflect, hit those targets and what, you would expect for members and growth rates and membership fees and so on. And so there's some, but it's a pretty large space. It's 50,000 square feet. We'll have hopefully a couple thousand members, and it's also open to the public. So there's a lot of different spaces. So there's a lot of people involved, in making the thing a success. So yeah, while I'm involved and Dan's involved, there's only so much we can do because the organization is already larger. If it was, a 4-person technology company and we were 2 of the 4 people, that's totally different. So and I think that would even be harder.
I totally agree. It was really nice to chat to you.
Thanks. Yeah, this was fun.